there's a lot to be said about these markets, and there is a thing called, does anybody come across the daily FX publishings? Pretty much if you do a forex search and say, show me everything today, on YouTube, you'll come up with a daily FX. So here's conventional wisdom. And I think a lot of people think that if they sign up for this guy's webinar, this is a webinar he just published a few hours ago. And so he's going to go through the fundamental news. He's going to show you all the news coming up. And this is just the cliche stuff. And I think this is what could be kind of what people think that trading is. And I don't think it is this. I just don't think this view of trading is really going to make any money. And it says day trading markets webinar. It says day trading you know what I'm trying to say. Webinar for day trading. And so this guy, I don't know who he is, this Daily FX has they just churn out these analysts. And listen to this guy and tell me if this stuff rings true as far as it making sense, like you're, oh, okay, that sounds good. So let's check this guy out. Let's give him a go here.
Down the list, I see what's important. I basically get a glimpse of which currencies might be affected, and then move from there. Okay, Platini says, what does
Okay, what might be affected? And he's got the news. Now, this is the classic approach. Let's go look at the calendar. And let's organize our week. Okay. I don't know if anybody's tried to do this. Okay, you might know that there's news coming out. There'll be volatility, but can we make money off of this stuff? Do we have a trade plan? Do we have a trade plan? I think the whole question is, and this is kind of the kind of mundane stuff, and the kind of stuff that, when people say to you, do you have a trade plan? You're like, well, that's really kind of a very difficult thing, because then it involves like all this stuff and how many tickets do you have? Do you have one ticket? Where's the stop? Where's the take profit? Which time frame are you getting in? When are you going to do it? Is it at the market order? Is it a stop? Is it a limit? I mean, it's just so, that is the hardest thing in trading. Even these level 2 people, right, these dom traders, a big dispute with this dom trading, in hindsight, now that I'm not on a rant, I'm in my car thinking about the market, because I don't want to trade while driving anymore. That's actually risky. So I'm thinking to myself, yeah, but 5 decimal broker. So if somebody's trying to trade the T-notes and they're trying to make a 1 tick, I have 10 ticks more resolution in a 5 decimal broker. Now, if you're on a 4 decimal broker, then you might as well just trade the T-notes. Right? I mean, it's about resolution and about the ability to be flexible and all that stuff. But that really has nothing, like if you watch these webinars, the checklist here, and then sign up for our course and we'll teach you how to, drive a car. They're kind of teaching you how to drive a car, but they're not teaching you, like, who takes driver ed courses where they go, okay, we're waiting for a storm, and then we're going to take you out and learn you how to drive in a storm. Well, the markets are stormy, so, there's so much stuff that's just outside of the realm, and that might be an opportunity when, it's like, well, it doesn't fit my checklist. So this checklist idea, it's okay, but maybe you got the wrong things on your checklist.
Fibonacci tell us, my friend, I could spend a whole hour on Fibonacci, and we do, on our...
He could spend a whole hour on Fibonacci, and we do. Now, this is a rat hole that people, or a rabbit hole, It's just mind-bending. Without a trade, they'll never talk about a trade plan during those situations. And here's got the conventional moving averages, blah blah blah. It's just this is classic. Every trade book has this in it. Anybody making money from these trade books?
Our training webinars on Tuesday and Thursday. In short, what these are telling us are just percentages between 2 values.
I like Fibonacci Friday better. So he's going to throw out the fib and listen to what he says about it.
The Fibonacci ratio typically designed to find values of support and resistance, and just
typically I would just say it's a good risk-reward ratio, but how is this? You're just such utter frustration if you're trying to make money right here at this point. You're like, okay, but How's that going to help me make money?
Remind me at the end of our webinar. If you want more information, I will point you out to those videos. But again, because we have limited time here, what I'm going to do in short is get you a great link. This is an oldie but a goodie. It is written by yours truly, and it is titled "How to Use Fibonacci Retracements for Forex." So enjoy the following link, my friend. And
but not to make money. How to use how to use Fibonacci ratios. I'm still waiting to see the guy that says, I got this order at the 618.253, got in, unfucking believable. I put on giant, I bought 5 yards.
there you have it. With that, let's move to our first currency pair of the day. This one going to be the euro dollar. Now, the euro dollar, remember, big for the fact that we have that ECB news later in the week, and we can see the surge in price on the back of the NFP miss on Friday. Now, before we jump to the shorter term graphs, again, I just want to get a perspective here about our trend. We see prices trending up above our 10-day EMA, and we see prices remaining firmly over our 200-day simple moving average.
But see, people want to make money right now. How is he helping anybody? People want to make money right now, today, this week. The fact that we've crossed over this, that's all hindsight. We don't care about that. Look at this entry here. Now, here's the argument for the, and how often does this is the ultimate entry, right? I had an order pending at the moving average. And now that setup, which does occur occasionally, here's one, okay? I could cherry pick all the entries. See, moving averages do work, right? Yeah, they work here, sold. And I know what you're thinking. Well, let's program a robot to buy in the pullback here. Okay, well, how tight is that robot going to run a stop? Is he going to take this trade and get trapped in a down? Is he going to take this trade? He will. I've done EAs. You could just see here the robot's going to sell. You're below the 200. You have the 10 coming down. He sells. He can't see the structure. He can't see the top becoming a bottom. He gets his face ripped off. Right, gets his face ripped off. This thing goes up. I like to trade bar by bar. See here, buy limits are pending. Bam. Looking for low ATRs. Here's a vacuum filling. Even the moving average got it right. And you're below the 200, it's okay to be a seller. To me, my opinion, the market only has 2 trades: reversals or breakout. Like, you're either getting in, riding it, or you're going to get into the turnbuckle. What other trade is there? Reversals are the biggest. This is a reversal in cents here, right? Up, 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 up. Reverses. You're either going to get in here when it's quiet and ride it somewhere, or you're going to have orders here to get in the reversal. Right? Small, breakout, reverse. Here's a trap entry with low ATRs, so this is even a better place to get in. In other words, it's a dual setup. It's a setup for the breakout guys. It's a setup for top-bottom guys. If you consider a setup being conditions, just instead of the word setup, a lot of the stuff, you really have to go to the thesaurus and take the word setup and look at or take words and look for the alternate meaning, because it takes you down a different path mentally. And this way you can start to, in your self-dialogue, you can start to reframe things. Even the word Fibonacci is like a trigger word for me, because it's such a misused thing. So when I hear it, I just think, oh, here we go, another Fibonacci genius. And I always wonder, these guys are on staff or something, I guess, to do these videos. I don't know where this comes from. How do these guys get this gig? Like, they say, well, you have a nice voice, and you seem to be, would you like to come on to, and they take the offer, right? I just would never want to be under the restrictions of not being able to tell somebody to go to fucking hell. So see, the luxury I have, I don't have any sponsors, so I don't have anybody I can just go off on somebody and tell them they got their head up their ass without any, look at this, oh, I missed this setup. Look, we found support at the 200 period moving average. But, ooh, it's sloping in a downtrend. I'm torn. Should I sell that? Still in a downtrend. Oh, wait, at the crossover. So I bought at the crossover right here, and it pulled back, and I blew up my account. Oh, okay. So all this stuff, you can see all the flaws in this kind of like one-size-fits-all thinking. And really, that's what Fibonacci is. That's what moving average is. One-size-fits-all. You're not trading the market. You're trading what you're trading your filters. And you're not over trading. It's true that you're not going to blow up your account, because you're not going to get a lot of so-called signals.
The reason why I'm dragging this back out to the daily chart here is we're actually forming an inside bar. Now,
Of course, we can't trade the left side of the chart. Don't forget, I mean, this might be a real surprise to people, but we're forming an inside bar. Okay, so what? Let's put it, we have a low ATR. Inside bar means we have a low ATR. How about we bracket that with buy stop and sell stops and just see what happens? But then again, if you did that, how big are those tickets? How many are there? How far are they spaced? How long do they last? How much time, patience do you have for that trade to unfold? There's so much going into that. Do you have a day job? Can you babysit the market? I mean, you could just see how, if I said that if you want to be a race car driver, buy a race car, tune it up, go to the track, practice. Okay, do you have time to go to the track? Can you afford the car? Do you have a new engine? Did you design the engine? I mean, it's just, you go down this giant hole of, but see, you're actually competing against other people. When you're trading, you're competing against yourself, your fears and your hopes, your desires, and your all the things, frustrations, and all these. You're really trading against yourself. So you're your own worst enemy, I suppose.
inside bar is just an area where prices have failed to make a new high or low. Now, this consolidation is important because the euro dollar has pretty much been a runaway freight train since we've gotten this gap.
Look at the century here with these two dojis. Where it comes back to this top becoming a bottom. So you have a top becoming a bottom. Doji, so ATR entry and a structure entry. So it's a dual reason to get in, right?
On French election part 1 going back to April, and prices have risen about that 400 pips above this 200-day moving average. So if you're a dollar bull, for whatever reason, again, you're looking for prices to break down underneath Friday's low. Also note the 10-day EMA very close to this value, and vice versa. If you are a dollar bear, you may be by proxy a euro dollar bull looking for a breakout over the high, 128.36. Yes, it's going to be 12.86. Excuse me. Now we've got.
But no mention of how you would trade that. Now, if you bracketed that, you're risking that whole day. This is a daily chart. It's a very high risk trade. So why not just buy now and then put a buy stop above, and you're going to add and build in. You're going to scale into it by default, and you have a buy limit below in case you might be wrong for a few pips. It's really hard to trade because if you have the ability to trade multiple tickets, then you're designing a trade. Really, you got to get away from these buzzwords like setup, and you're designing, you're creating opportunities. I find it really useful to go to the thesaurus, and then you're going to open up parts in your brain that are going to say, oh, you know what, I never framed it like that. See, the reframe stuff. All the money you've lost is, or won, or all the money you've won and lost is just like everything else. All the places you've gone to and they were overrated. Anybody see these brochures, and you go to the place and you're like, I remember I went on vacation once to the Bahamas, and I'm like, so this is what people are all like. This just looks like where I live, but worse. So it's like, I don't know.
The bigger perspective. Let's go ahead and zoom into our shorter term graphs and start looking at our intraday values of support and resistance. Now I'm going to leave the inside bar values up.
First thing that jumped out at me here was this reversal entry, which I think the most amount of money ratio-wise, where you're really taking a risk when you get in the breakout strategies like this thing is going here, going here, going. I think you need dual approach. Like you could be, okay, I'm selling, but man, when it comes up here, and when I look at slams down here, look at this coming into the hole, fills up, and just right here, this entry here, or how about this rally? These wick entries, that's like beautiful, pure auction, right?
So we can continue to use them as a reference here. But in short, prices moving lower to start Monday's trading. We see a pullback relative to our overall trend off the highs and testing S4. Now, for me, this is interesting. Just for the fact that S4 is doing its job, it is supporting a pair, but
he's using these indicators. S4 is doing its job like he hired this thing.
Prices have failed to break out lower underneath this value so far today. Again, if you're a bull, a breakout under S4 would be significant. Why? Well, let's look at our projections for today. If we look at a movement underneath S4 and we keep on.
Okay, so this is the thinking that I'm having a problem with. It would be significant if it broke out. But then what? We're going to chase it to the downside? That's what he's going to do. So he chases the market. He wants confirmation. All the wrong things about trading. It's not to say that 90% of people don't lose because they're just losers in life, but it does no good to take somebody into something and tell them, if we would have broke out there, wow, let's look for a place to get short. I think I should have got short on the other side of the fake breakout within the breakout. And this is the problem. Too much fucking data on the screen, right? There was a breakout here that failed. He's framing this on his indicator, and look, it's doing its job. You never want to have you don't want to have stuff so complicated. Even these dominant submission traders with their level 2, you don't want to have this thing, well, okay, look, this thing's finally working. It's the price is randomly vibrating. So how can you can attribute, if you do win, you're going to attribute to whatever you're using at that time. But is that really what's making you win, or is it making you win because you got the stop right, the take profit right, the size right, you entered at the right time, you nailed it for whatever reason? But every time I read a trade book, I thought to myself, no, I want something that I can just say, well, I just want to pick up one style and just keep doing that one thing. And just duplicate that, right? Just say, I'm just going to be this guy and do that. But then you see other opportunities. You're thinking, well, like the first time I saw a move like this, I said, how can I make money on that move? Now, you could have either put buy limits here and buy stops here and taken a risk of a possible trap as it explodes. But look at that thing clean up. Man, that was a trade, wasn't it?
Our risk inside of our range here. What this is going to do is expose using a one-time extension of our range and using a 1 to 2 risk-reward ratio.
Here's what we got. We're going down Stapleton Highway here. Now, this is classic bullshit thinking. This thing's never fucking... I'm looking at the price right now. Like, this was a killer scalp earlier, and this is $0. And this is the idea that you're going to trade one ticket, too. This is nothing that's... I'm just assuming people are getting their ass kicked on this, because I know I would. If I traded like this, I'd be broke. I'd have to trade... What size is this ticket going to be for this outlandish setup? This is outlandish. Who's doing this trade?
Move down. Oh, I'm going to need a little more chart here, a little more. There we go. It's going to take us just about 44 pips lower.
Sounds like Barry Burns. I think Barry Burns has got a second job.
I'm Barry Burns here, daily FX trading. Let me show you a setup.
To 111.92. Now, where does it put us out? This is going to be back below our previous low, and it would invalidate that inside bar on that fresh bearish momentum. Oh.
See, this invalidation stuff. The rule systems. I mean, who lives her life like this? Okay, she's hot, but I noticed that she's got the brand of glasses she's wearing. It's like a deal killer.
Okay, Yuswana says, what are the lines that you're using? These are going to be Camaria pivots. Again, if you've never traded with me before in our Day Trading Markets webinar, please ask your...
Okay, it's 7 to 6 by the Eurodollar right now. Anybody that's on my signal service. Of course, it's too late. You're watching this video. It's going to work for you. A lot of hindsight. Buying the euro right here. Yeah, we never saw that. I don't even know why he's trying to sell this thing. Because it's so uptrend. I don't know. He thinks it's. I don't know. This is the bearish. You just wonder, right? Don't you just wonder what's going on?
Your questions here, and I'll point you to some resources along the way. In short, Fibonacci is going to be a value of support, resistance, pivot points, a value of support and resistance. And the reason why I use these on our shorter-term graphs is for the fact that it speeds up our analysis here, because we only have an hour to run through our charts here on Monday morning. So with that, if you are interested in learning more, ask your questions here, but check out the following resource. This is going to be another great article, if I do say so myself, just because.
So come and listen to more education. It's sad to think that educators, same thing when you go to college, I'm sure. I only survived 3 months in college, but you got to wonder, right? This is what we're supposed to bank on, is these people's conventional moronic wisdom, right?
It happens to be written by yours truly. It's all about trading reversals with Camaria pivots. Basically, it's going to go into the lines, how they are calculated, and more, and you can find it.
Camaria, is that like a Camarello Brillo?
Here. Okay, with that, back to the graphs. If prices break down, again, projections taking us down to new daily lows, but prices remaining supported so far. If you're bearish on the buck, you're actually looking for prices to move back inside of today's trading range. Now, we know today's trading range is going to measure 44 pips. And where's our R3 value? R3 is going to be up above at 1302. So again, if prices rebound in the opposing direction, this does indeed expose us to a new...
This is what you have, these R3 and all these things. The problem with that is it's so arbitrary and it's just so ridiculous. You're driving your car and you're on ice, and you're like, well, honey, but look at the dashboard. It says we got a bunch of gas. Keep going.
New high. So again, this would be the conclusion of that inside bar pattern, but to a bullish target. So we're in very interesting crossroads here. Bullish or bearish, we don't know which, but
Wow. By the riverside. I just, of course, we're always right? There's, we could go either way. We could buy or we could sell. What's the trade right now? Right, what's the trade right now? And do you have a trade plan for right now? And you look at this stuff. I mean, this is Stapleton. I'm playing this guy back at double speed.
we could have serious implications at the conclusion
Serious implications. Like, turns out that she's already pregnant.
of this consolidation that we're seeing for the Euro USD. Now, at the end of the day, again, we do have R4 breakouts here at 13.24.6. And again, just for honesty, we need to go.
R4 breakouts, man. I'm telling you what. If you're signed up, if you're making money from the system, you got to email me because I got to get in. I mean, does this even make any sense? Daily FX. Now, you'd have to assume this is just kind of conspiratorially speaking, is that they're trying to get people to trade at Daily FX. I don't know if they're connected to a broker, because these are just churn your account setups. This is completely unfucking believable, right? Like, really? R4? You think the market knows that there's an R4 and S1? You think the market can see that stuff? Oh, but better turn around here. Don't forget that guy has an R4 indicator running on the screen.
Go ahead and look at all of our angles here. Of course, if we make it this far, up to 13.24.
If we make it this far, honey, you got to make... Like, he's speculating up in here. What in the hell? Just because this guy's supposedly educating a Daily FX, why is he trying to indoctrinate us with his stupid fucking thinking?
We already would have cruised over that previous high. We would have already been breaking out on the daily chart. But again, our projections take us up to 13.6.
This is when people think too far ahead. You could just see, just because you say that you're going to give a webinar on daily trading markets and you work for some big firm called Daily FX, a lot of people give that some type of creed, like, this guy must know what he's talking about, other than that motherfucker that's just yelling at everybody.
Steve said it. And for you longer-term traders, that's something that we want to pay attention to. And
Pay attention to. Now, this is a classic. You hear this all the time. Pay attention to. I just got to come up with a list someday of all the cliche shit all these analysts say. And this guy couldn't be a trader. Like, if anybody's traded, anybody ever traded the fucking market, been in a position and going, oh my God, well, it's kind of going against me. Maybe I should question my R1, S2, Dom 5. I see a big Bill Gates order coming in. Like, really? In other words, you're going to be distracted and think that, oh, but see this tick at the bid. You don't understand, Dom, man. I guess some guy put a bunch of images up of people trading. I'm like, wow, look at that. Look at the professionals are using it. Okay, so the professionals aren't getting their ass kicked. I've met so many professionals in industries that you wouldn't believe. They don't know what the fuck they're doing. Why would it be any different in this industry?
as well. So the euro dollar, a little bit of consolidation today. We'll see if we get any further momentum one direction or the other.
Why do you think they're recalling cars? This idea that, you think Volkswagen is a big company. They could actually absorb a fucking fine for them trying to get around the EPA and live in a realistic world and kind of get their mileage numbers down and their emissions or whatever. And they put a chip in there. They're very clever, right? They put a chip in there to kind of skirt around the fact that they can't compete with all these people that are, the government has this, well, it's got to be this and that. We want to have cars and mileage. We want to have like a car that has 100 miles to the gallon by 2030. So you'll just be riding a bicycle, right? I mean, what the fuck? I don't know. This is the world you live in, though, so you have to deal with this. But this guy is trying to help people or something. You have to see through what he's saying. In other words, people put a lot of weight on, well, he's my instructor, and I am paying $5,000 a month. And I mean, come on.
Okay, long distance high five. Yes, this one's a comment about the euro dollar, asking about the sentiment figures. Now, I didn't bring up sentiment figures for the euro dollar. They remain extreme. And
now, how the fuck does this help your trading? You're in a position, well, the sentiment, honey, the sentiment's really good. I think we'll just add to the account. We're down about 40 grand right now. Just add. Look at the sentiment index. Okay, honey.
Near exactly where we were last week. Notice when we go to the sentiment page, and again, if you're new to sentiment, let me get you.
Who's got time to go to the fucking sentiment page? I'm getting killed on this fucking trade I'm in, bitch.
That link. here it is. We still see the majority of traders going to be short the Euro USD. And
Oh, so let's fade them. You know, this is another thing I ran across. I talked to a lot of traders. They'd say, well, you know, there was this guy that said he would bring up all the traders, right? The concept here is retail traders lose, so let's fade them. Well, but what about the trade that you're in, right? I mean, when you start to say, well, let's look at the sentiment and look at the retail traders and look at what the commercials are doing. And I've been through this, man. Years ago, when I was trading commodities, people had this Consensus magazine that came out. So I subscribed to it, right? And what is the, oh, you know, the producers are net long, the commercials are net short, the hedge funds are this way. What does that have to do with your trade? I mean, I realize the idea that you want to, say you want to open a coffee shop, so you buy a bunch of coffee industry magazines and you do statistics on whether coffee shops are popular and all this shit. But what are you going to do? What's your special trick? So what it is, everybody has their own special trick, and what it is their fucking personality. And people don't trust their own, like, they go, wow, I just made money in that trade, but I didn't make it the way that I was told by the books, so you invalidate that, right? You discard that and go, huh, you know, I just got lucky, I guess. No, you're onto something. Okay, now you build on that. So I can't really, all I can say is that you are your own guru. So to trust yourself, you have to start, if it's a demo, whatever, you know, I'd say start with a very small account with real money and develop the skill of trusting yourself. And it's going to be so difficult because you're in an industry where, you know, you probably can't find a lot of calculus. Although if you go on YouTube, you can go to MIT and watch a guy do give a lecture on quantum physics. But and that's not going to make you any money unless you take that and abstract it and bring it into the market or something. But you know, to trust yourself is difficult in a world where, you know, but you don't understand. This guy drives a Ferrari and he must know what he's talking about, or whatever this is, you know. And so people look to something else to try to support their belief system. And if somebody agrees with you, then it's even worse, right? Because maybe you're wrong, and then you're looking for the confirmation bias. But it's almost like the learning that these people are going to. You see, euro expected to rally further versus downtrodden. Interesting words here. Downtrodden U.S. dollar. They always had these inflection words here to, you know, like downtrodden. That's like bad, isn't it? The poor people. So, and the thing is that how does that help you enter the market, and how does it help you size the position? It doesn't, and nobody talks about that. You know, everybody can talk about car racing, but it's like, do you have enough fuel to even race your car, test your car today? You know, racing fuel's not cheap. You want to go on the track and practice? It costs money. And these dom trader people, I'm hearing stuff like it's $180 to get that data. So this guy's pissing and moaning about he says, well, I'm only paying $3 commission on a $100,000 position, and I'm buying the bid, and I don't have to buy the offer. I'm buying the bid, and I'm locked. You know, like I'm not getting screwed on a spread. But he's paying maybe $180 to get this fucking data. He didn't put that in the formula. I'm assuming that's free data this guy's getting. This guy that's telling me that forex is for penny traders or something.
And basically, this is going to be 70% of traders using, reference and ID client sentiment is going to be short relative to our 30% remaining long. Now, again,
and look at this. Now he's nitpicking into percentages of what other people. This is the IG client sentiment. I think this is the kind of bullshit with that Dom stuff. Well, look, there's orders here. Where's your order? Well, we got a big block order here at the ask. If they trip it over there, it'll go up. How is that helping you size the position? How is that helping you execute it's not. And then you're going to hindsight it and go, well, see, it works. See, because like I took that trade and look at it. Oh, of course, we can all see what the market's doing. When the market's quiet, sideways, it's going sideways. What do you do about it? If Bill Gates has an order sitting above and below and he's bracketed the market on limits, you're like, now you're thinking about what he's thinking, and since he's rich, and if I do what the big boys are doing, Well, you think the big boys know what they're doing? Like I just said, look at Volkswagen. Look at any company that's fucked up. You can't get a bigger boy than Bear Stearns. Didn't they get into some default swap fucking bad trade? Okay. Anybody that's alive has just the same ability of success than the big boys. How about they're just all people? I mean, this everybody's trying to take sides. Well, there's this, that. No. You're alive, you're individual, you're one person, one brain, 4 arms, or 2 arms, 2 legs, unless you've been in an accident. So this kind of us them stuff, it just pisses me the fuck off.
Afternoon, typically this is seen as a contrarian signal, which would be bullish. And short prices.
So then you're going to try to fade this contrarian signal. Now you're going to go against the mob. It doesn't help you with your trade plan. It's not helping you. And you're thinking, well, but it should help me. I'm seeing the big picture, right? I don't want to open a coffee shop unless I know. But what if your coffee shop sells crack in the back room? What if your coffee shop comes out and you get, you have the hottest waitresses? We got a coffee shop down the street here that's like Hooters, right? Very small coffee shop. You pull up, all the women are giving you your coffee with Benny Hill cleavage. And here's your coffee. The coffee could suck. You think guys aren't going there in the morning to get, how many chicks are showing up? Well, right, lesbians.
Been trending up. Traders are looking for a reversal. So
traders looking for a reversal. Should you be looking for a reversal? I mean, your head's already spinning. At this point, you're like, well, then what do I do? I mean, at the end of this whole thing, this is as far as I've got here. I'm not going to watch 52 minutes of this guy. That's why I'm watching double speed. But you just have to think about your thinking as opposed to thinking about other people's thinking. Think about your own thinking. See yourself outside of yourself and say, well, what if I try experimenting? Well, I can't experiment. This is a lot of money, and I took this course, and I got to do what they told me. And really? Are you really going to do that? You have to be able to think on your feet. You have to be able to think each situation's unique. So you need an abstract, conceptual approach to the market. You need a philosophy because the market has completely going to unfold in a way that you never expected. So if you have your S1, your S2, your S3, your Fibonacci, and all that shit, it's not, you're looking for stuff to key off of that. Meanwhile, you don't have a philosophical approach to the market, abstract, conceptual approach of, if it's sideways, I have a trade plan. If it's screaming in either direction, I have a trade plan. Trade plan based trading, right? Risk plan based trading. Then anything that comes at you, see the idea that you can, what a table looks like. You don't have to memorize every table that was ever created. You know what a table looks like. So every time you see a table, you kind of know. You pretty much know what to expect there. Now, the height of the table, the width of the table, all that shit, this is what they're doing. They're saying, well, we have a table that's like this. Yeah, but it's a table. Don't put too much into that. I mean, but the idea that you're going to pile on and make more suppositions on top of suppositions now, instead of being abstract, you're going down a instead of being conceptual, you're going to go perceptual. Right? Instead of a concept, you're going to live off of percepts. Now you're like, well, but look at this. This is all perceptual data. There's no concepts in this thing. And come watch my Fibonacci webinar. Are you fucking kidding me? I'd rather stick a pine cone up my ass.
Similar. Now, there is one small point of order if you're watching the shift intraday on euro dollar. When I looked at these values Sunday night, again, yours truly on this side of the mic, working hard, even.
Yours truly. Man, I thought I was taken with myself till I met this guy.
Watching markets in the evening for you, our sentiment ratio was at minus 3.2. Now, listen.
Oof. I was looking for a 0.8. I'm not taking the trade.
This is when I watched it overnight. Again, don't quote me on the time. I think it was somewhere around 8 p.m.
Oh, don't worry.
Central. But sentiment has really come off from that point.
Oh, okay. Well, then, fuck. Okay, honey, kill that trade plan. Sentiment change.
So, yes, while it is similar to last week, that big
get my wife slaving away. She's a MetaTrader in the back here.
Shift. I want to see if it continues moving in that direction. And if the euro dollar does indeed break down.
Oh, and then you'll get confirmation, and then you get in the trade. See, this is the whole thing. All these things that have situations that have to line up when he doesn't have a core approach to life or whatever. You just wonder, maybe the problem is here he's too normal. He's too normal to trade. I mean, he's probably like, his car's got a full tank and, you know, everything's going well.
And does one of these, breaks underneath these daily graph lows. Well, I want to see that sentiment value move back towards a more neutral reading.
See, now if that happens, then he wants to see that sentiment value. Now he's going to trade against the sentiment thing. Do you see how the clusterfuck he's in here? Your head's spinning. And how do you judge that? And what weight do you put? Does that change the size of your order? Does that change your stop? Does that change your take profit? Does that change the time you trade? Does that trade how long the tickets are pending? How could anybody make money from this? How could anybody? It's just incredible.
Would be very helpful in confirming a potential shift in the trend. Vice versa, we can't discount the sentiment, still extreme, if we have the scenario where prices begin to bounce, move through our range.
We can't discount the sentiment. He keeps coming back to the sentiment going to the chart. I mean, really? Still no trading. This was called Day Trading Markets. It's called Forex Webinar Day Trading Markets Daily FX.
To break out to those higher highs.
Just posted today. This is 6/6, June 6th.
I would look for the sentiment numbers to move back to those even larger extremes of possibly -3 or more going into the rest of the week. So
you can't make money from sentiment.
Good point of order. It's a wait and see for me right now, but definitely
it's a wait and see for him. See, this is another thing that just crushes my brain. Wait and see. I can't wait and see. I'm impatient. Plus, I feel there's an opportunity right now in some time frame somewhere, right? Buy the euro if you're on the euro. It's too late, right?
Tool that we still want to consider. All right, let's move to another chart request. Yes, this one's saying, what are the effects of the pound dollar and the upcoming election? Sure, let's talk about the pound dollar and the upcoming UK election. Again, this isn't an economic event, but it is still important because we'll see coming up on June the 8th, I believe, the UK is having a general election scheduled to take place. Now, I'm going to be brutally honest with you. I don't follow polls that much. I don't put a lot of emphasis on them because as we've seen last year for the UK election, also for the Brexit referendum, hey, a lot of the times the polls get it wrong right, but I do need to be aware that there may be a little bit of volatility coming down for the pound going into Thursday. Now, as we stand on the daily chart, we can see the dollar selling off with this pound rally. And again, back over our 200-day moving average here, a move of about 400 pips from high to low, similar to...
Okay, I'm not going to torch you anymore. You get my point, right?